Good morning, everyone. I hope that you are doing well. Welcome to this new lecture of the Uncensored series. Here we're on the daily chart of NQ, and as you can see, NQ is currently being repriced towards the upside. It's currently the 14th of October 2024, and it's a bank holiday. The fact that we are seeing this repricing towards the upside taking place is something to be very mindful of, in my opinion. With that being said, what I will do is I will read the tape for you, and therefore I'm just going to showcase to you how you can look at a day like today. Today is a no trading day for me because it is of course a bank holiday, and as outlined prior, I never trade bank holidays. The fact that we are seeing the market expand towards the upside now is a result of heavy repricing taking place, and I don't want you to think that this is a characteristic of bank holidays, because it's not. Therefore, you shouldn't feel any FOMO now that the market is expanding higher and you're not in the move. I don't even feel any FOMO to put on any risks today because I know that today is not a day to be trading. So with that being said, let me share with you what I'm looking at. What I want you to see is the following. I want you to see that on this daily chart right here, you can see that NQ is currently being repriced into this daily CB here. I will be monitoring the reaction to this daily CB right here. The reason why is due to the following. I want you to see that inside of this daily CB right here, we have this old low which we display through. I am monitoring the reaction to this low. The reason why is because this low formed inside of this BC on the left here. As long as NQ doesn't displace above this CB, we can still anticipate a potential high to form in this area, since there's this big SMT between NQ and ES. Therefore, what I will be monitoring is the following. I will be monitoring the reaction to this daily CB now that we are nearing the 10 o'clock hour. Now let's take a look at the hourly time frame. What I want you to see on the hourly time frame is that the market is being repriced towards the upside aggressively, meaning it's trading into a deeper premium of the daily CB. What I will be looking at is the following. I will be looking at whether or not we are going to see a 10 o'clock open, high, low close. That is what I will be looking for. Those are the signatures I will be spotting and monitoring. So with that being said, let's dive into the lower time frames and see what we can anticipate. As outlined, I will not push any buttons today because today is a no trading day. So what we can see is the following. We can see that 10 o'clock has just opened up, and what I want you to see is that from the 9:30 open, we have done nothing but reprice higher. Meaning you can see that from the 9:30 open, we dropped lower and then repriced towards the upside aggressively. If you wonder why my voice may sound a bit different, by the way, I've had a few travel days, and I'm finally back home. So you can anticipate that I'm going to be more locked in again when it comes to the content and such, and of course recordings and etc. However, I'm still a bit tired, getting used to the climate here in the Middle East, and it's pretty damn hot, but I'll manage. I'll get used to it. So if that explains why I'm a bit tired and why my voice may sound a bit different, I hope that you understand. So with that being said, that really shouldn't matter, because you will see me again draw lines and predict the future, and that's eventually what matters. So what we can see is that 10 o'clock has just opened, repriced towards the upside, and formed a high here. Now what I want you to see here is that if we turn this time cycles indicator off for a moment and we monitor this delivery right here, what I'm actively going to monitor is whether or not we are going to see a Kraken correlation at the highs take place now. If we are going to see a Kraken correlation at the highs now, then it means we can anticipate that a high is likely forming in this area. What I'm going to do, by the way, before we continue further, is the following. I'm going to be marking up from this daily CB, from low to high, the quadrants, meaning we are going to be paying attention to the quadrants. And as you can see, NQ was just repriced above the 25% quadrant. That means we are in a deep premium of this daily CB. Therefore, I'm anticipating a rejection to take place in this area. So if we drop into the 1 minute time frame, we are going to be working with these quadrants. We are going to anticipate that we are forming a high in this area, anticipating high to form in this area right here. And we are going to anticipate that sell-side liquidity is going to be made eject. First of all, sell-side liquidity is resting below the low that formed at 9:30. And secondly, our sell-side liquidity resting below this low right here. Why? Because what I want you to see is that we had this shallow consolidation right here before the market expanded towards the upside. Therefore, we know that sell-side liquidity is being engineered below these relative weak lows here. Now, what I'm going to do is the following. I'm going to type out that today is no trading day for me. All right. So with that being said, let us look. What I want you to investigate for yourself when you go through this delivery is that ES is making higher bodies here, whilst NQ is making lower bodies. That right there is a correct correlation on the bodies. What I need to see is the following. I need to see the market displace below this BC right here, and that would confirm to me that the high is in. Until that displacement takes place, I do not really have a strong confirmation, so to say, that the high is in. Therefore, we need to see the displacement below that imbalance taking place. And this is a future resistance, so to say. Notice that this lines up with 25% of that daily CB. And again, I apologize if I may sound a bit tired, but it is what it is. Like, you can't be energized every single day, but even on days where you feel tired, you just need to put in the work. We're locked in. I've already shared with you that I want to make this fourth quarter really count, and I want to make a positive impact on all of your lives as well. So that is why you will see me be more consistent than ever when it comes to, for example, creating the uncensored lectures, when it comes to, for example, creating audio lectures, when it comes to trade breakdowns, and I'm also thinking about releasing a new series, which I will touch on soon. I also want to create some more lectures for the psychology series, but that's something to discuss soon. So right now I'm paying attention to the following. I'm paying attention to this BC. I want to see how they're going to utilize this BC. If we displace below it and utilize this resistance price, then that's a confirmation that the high is in. And what I want you to understand is that because Standard Clock opened up, repriced higher, taking out the previous cycle high, there's no reason, in my opinion, for the market to reprice towards a new high or create a new high if we displace through this BC. Therefore, the reaction to this BC will be very important. I want to see the market displace below it in order for the confirmation to be there for that high formation. I'm also monitoring ES, and what we can see is that ES is also trading into its 1 minute imbalance now, and we need to see both markets displace below them or below it. If that occurs, we can anticipate lower prices to take place. Notice that 25% of that daily CBS reached now. I need to see the market reprice through that 1 minute imbalance quickly with speed and velocity. When that occurs, I need to see the market utilize that range as resistance on price. If it doesn't utilize this range as resistance on price, then to me that's a sign that we're likely going to continue higher, and then the high of the day CBS likely going to be the draw. But one of the things that I want you to understand is that even though we are seeing the market deliver aggressively like this towards the upside, understand that it's a bank holiday. Meaning, on bank holidays, we never look to trade. And that's why some of you are probably going to think now, oh, look, this bank holiday expanded initially. It ran up higher quickly. So therefore, I should be looking to trade the next bank holiday. No, what's that toxic thinking? No, you need to understand that we think in terms of, okay, over a series of bank holidays, what's the delivery that takes place the majority of the times? The delivery that takes place the majority of the times is this very messy back and forth time distortion. And we have no interest in looking at that. So therefore, you need to understand that I'm sharing this with you for a reason. I'm sharing with you for a reason that days like these get avoided. And that's just what I want you to understand. Notice that we haven't closed aggressively below this BC yet. Instead, we have found support at the lower end. Notice that we have formed this very small CB here. Pay attention to the direction of that CB. This is not the type of, you call it, this is not the type of entry I would take. And the reason why I wouldn't take this entry right here is because to me, it's not confirmed yet that the high is in. Surely we are seeing that SMT on the highs here between NQ and ES on the bodies, but I really want to see the market displace below that 25% price level. If it displaces below that 25% price level, then I can anticipate that lower prices are likely going to be the draw. Surely we have closed below it here, but I want to see it really begin to accelerate towards the downside below that BC right here. And by the way, guys, like, you might be looking at this and you might be thinking to yourself, when you're making an analysis like this, when you see what's like going to happen next, when you have a clear understanding of what's like going to be the draw, are you not feeling any FOMO? Are you not thinking, oh, I should be in here, I should be doing something? No, why not? Because last week was an absolutely killer week. Last week, I captured the low of the PM session on Tuesday. I captured the, or near the high of day on Wednesday. I caught the high of the lunch session. So many of you have been asking me how I was able to do so, but I won't tell you that. I'm sorry. I did a bit. I broke it down a bit, but there's certain things like, yes, it's not possible. But I caught the low of day on Thursday and I caught the low of day on Friday. Guys, like, do you think I really care about this one opportunity that might present itself on a bank holiday? Of course not. Like, so many new opportunities will come later this week, and that is what my focus is on. And when it comes to anticipating these moves, you need to understand that these moves, they occur based on a time-based delivery schedule, meaning every single day at specific time windows, you will see opportunities present themselves. Pay attention to the direction to this CB right here. I want to see the market really begin to accelerate towards the downside. I don't want to see it now reject and again trade above that 1 minute BC. I need to see speed and velocity towards the downside soon. The reason why is because ES is not making lower lows here whilst NQ is. But so far this is beginning to look interesting. Pay attention to this of course candle here. I now want to see speed and velocity towards the downside, meaning I want to see big down close candles. I don't want to see the market spend a lot of time here to go back and forth. No, I really need to see it begin to accelerate towards the downside. And the same goes for ES, but ES has still yet to basically displace towards the downside as well. So I'm actively monitoring that. I need to see ES move in sync with NQ. If ES doesn't begin to move in sync with NQ, then that's a warning sign that this is not a distribution cycle beginning. Pay attention to this upclose candle again. I want to see the market find resistance inside of there. You might be listening to this lecture and you might think to yourself, can't you be more enthusiastic? Can't you be more exciting when you speak? But guys, like, first of all, I'm tired, so my voice is already like, it's not the most energized. And secondly, you need to understand that when you're behind the charts, you try to be dead inside, meaning you try to read the order flow for what it is, meaning you just try to be out here and seeing the market for what it is. If you're all excited and if you're all, oh, this is cool, that is cool, this and that, blah, 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 then you're not reading the market for what it is. And then what you're doing is you're projecting those feelings upon the chart. So one of the things I had to learn was that the moment I open up the charts, I'm a completely different person than when I'm outside of the charts. Outside of the charts, there's room for me to be a nice guy. There's room for me to be, exciting and, to be funny and all of these things. But the moment these charts get opened, the moment that I'm out here, putting myself in front of the charts, in front of the live delivery of price, in front of these fluctuations of these candles, I'm a different person. And that means I know that I need to be out there aligning myself with the market, aligning myself with IPDA. If I do not align myself with IPDA, what occurs is that I project, and that part there is not allowed. I need to be out here focusing on doing the right thing. every single day, every single week. And if I'm not doing the right thing, if I'm not the one who's eating, then someone else is eating off me. So you need to have this killer instinct that the moment those charts get opened, you become a hunter and you become to hunt for these setups. You literally are going to stalk these setups from occurring. You're going to look at these algorithmic signatures and you're going to be looking for them to occur at specific times from specific levels. And when you begin to do that, you will begin to see the precision that you're looking for. So what I'm seeing is that NQ is displacing towards the downside. Pay attention to this 1 minute imbalance here. ES is still not falling along. It's beginning to show the signatures of wanting to roll over. However, it's not really rolling over just yet. I really need to see ES begin to catch up to NQ soon. And for those paying attention, I'm not going to swap the chart because I'm of course recording the Nasdaq chart for you. But if you go to the ES chart on this day, what I want you to see is that ES is not trading below the 1007 low yet, whilst NQ is. The 1007 low was the low which formed right here inside of this BC still. So ES has to displace below that in order for me to feel comfortable with the idea of a high being in. All in all, this delivery is very ugly with a lot of back and forth going, and I'm not a fan of this. Sure, you might think, oh, it's a clear expansion followed by retracement followed by expansion, right? In a way, yes, but for me, it's still a bit slow and it's still a bit, wow, I don't like this. And that's a result of it, of course, being the bank holiday, and I have no interest in trading that. So I'm not looking at this and thinking to myself, oh, I should be out here being a participant of this move. Because I don't care. I know that a new opportunity that's completely aligned with my protocol will present itself. At this point, if I would have gotten short inside of this CB, I would thrill my stop to break even, because to me, there's absolutely no reason for the market to draw towards this high again. It should remain intact. Now, what I see here is that we have a small imbalance here as well. Right here. I'm just going to remove that level, because surely it's an important level, but I don't really want to, put too much weight on it because there are more important levels. ES is still consolidating whilst NQ is being repriced towards the downside. And when it comes to intermarket relationship, that's not something I'm a fan of seeing. For lower scissors security runs, what you want to see is that you see both ES as Nasdaq are going to basically roll over together. If they don't roll over together, that right there is basically a warning sign of the delivery that might come to be messy. So again, as outlined, if you were short inside of this CB, your stop would now be to break even, because we have already showed a willingness to displace away from it. We have displaced away from this BC and we have spent time inside of this 1 minute BC. Therefore, to us, price should never retrace into that. And this is what I want to see. I want to see the market utilize this 1 minute BCS inversion to gap on price to draw towards the downside. And for your info, the reason why my eye was immediately drawn towards sell side is due to the following. What I want you to see is that from 9:30, we've opened up, dropped lower, and then began this repricing towards the upside. So who has been making money the first 30 minutes of trading? Buyers, of course, longs. Therefore, a lot of sell-side liquidity is engineered, which has to be attacked during the next time cycle. After this sell-side delivery has completed, what will occur is that IPDA will seek to go into basically a consolidation function, meaning where it's not going to deliver in a significant way because there's no reason for it to deliver in a significant way, because it has already went up and down, up and down. Immediate rebalance right here. This would be a partial for me inside of this lower BC. I'm going to mark it up for you. Immediate rebalance is when there's no time for an imbalance to create and the market immediately balances out the price range. Notice that we open up with this candle, reprice higher into the low of this first candle, and then immediately slam lower. It's a key algorithmic signature that signals weakness. Now we need to see this BC also get ran through, and then we need to see the market begin to basically draw towards the downside. But as outlined, if I would be in a short now, I would take a partial here. Why? Because the no daily bias model, as I've taught it to you, is the following. I shared with you that if we go short from a CB here, inside a premium of the current range, we target the C or a imbalance, a BC, in a discount of that range. What that looks like is the following. If I apply the current range and we measure premium to discount, what I want you to see is that we draw towards this discount BC here. This would be a partial in this area because we have reached a discount imbalance. ES is also beginning to draw towards the downside. It has traded below that 1007 low, but it hasn't yet traded. No, it has actually. No, those lows are relatively equal. Sometimes you need to pay close attention. ES is yet to trade below that 953 low, the low which formed in this area, whilst NQ is of course already repricing below that. But what I want you to see is that if we pay attention to the range, let me annotate it properly, my bad. What I want you to see is that we have repriced into a discount of that range from this low to this high. Why this low, you might be wondering. First of all, this low set up the repricing towards the upside here. So between 930 to 10, this is the range that we're working in. And therefore, what will occur is that IPDA will seek to reprice from a higher CB here in a premium into a discount BC that is right here. So at this point, when you've taken that partial, your stop can be trailed to the following level. Your stop can be trailed to this high. Why this high? Because this high set up the repricing towards the downside. And if you want to even be more aggressive, you can trail it to this high because this high should never get invalidated if the market is going to draw towards the downside. I'm not a fan of the consolidation on ES still, whilst NQ is being repriced towards the downside. The market is allowed to wick into or above this black line here, this price level, but I don't want to see it close aggressively above it. All right, monitor direction to this long wick here, which formed at 1015. Ideally, you never want to see the market displace above this BC on the left right here again for the order flow to remain bearish. What we're seeing is that ES is making higher highs relative to that consolidation it was in, whilst NQ is making lower highs here. So that's a Kraken correlation, and the Kraken correlation is relative to this high here, which set up the repricing towards the downside on NQ. So if ES begins to reject these highs now, whilst NQ begins to show the signs of wanting to roll over, then it would be a sign of very weakness. But to me at this stage, it's just the way the game. Meaning, if I would have shorted this CB here and this inversion for value gap, of course, or this upgoes candle here, then my stop would have already or is already trailed to break even, and I don't even care about what's likely going to happen next anymore. And that is a mindset that I want you to adopt and that I want you to understand, is that when the market is basically being repriced towards, for example, the downside, the moment you begin to see the market displace below key levels, you can already basically either remove risk completely or decrease it significantly by, for example, 50% or more. And when it is the case, it is a very comfortable feeling because at that stage, you're completely emotionally detached from the outcome because to you, it doesn't really matter anymore what's like going to happen because you know that, okay, well, the basically the target or the first partial has already been hit, commissions have been paid off, so to say, and even maybe a small profit has been made. And therefore, it doesn't really matter what's like going to happen next. I'm annotating this wick right here. I'm going to monitor the direction to this long wick. And on the 15-second chart inside of this wick, you will see an imbalance the price is currently retracing into. And that's the most comfortable feeling to be in as a trader because at that moment you don't really care anymore what's like going to happen next because you know, well, the job has already been done basically, and everything else that occurs is just, you know, it's extra, so to say. So in a day where you have no daily bias, where you're like, I don't really know what's like going to happen when it comes to the higher time frames, you can just target a discounted balance. So, for example, from this CB in a premium to this BC, that could be a model and that could be it done. And that's the no daily bias model, as I've been teaching it to you. And that right there is a model that is, in my opinion, very easy to spot and very easy to see. And it means that you don't have to target external range liquidity. You don't need to see the market, for example, draw towards this low at 9:30 in order for it to be profitable. No, all it matters is that you take a CB in a premium and you short it into a BC in a discount. Monitor direction to this BC right here. If we displace above that, then I'm not a fan of that. And do you see how all the warning signs are basically present here that we have maybe formed a low to attack buy side liquidity next? Final line of defense for the idea of lower prices is this opco candle with respective high. If we displace below that displace above that opco candle, then to me that's a warning sign that the order flow has in fact shifted. So this right here is the final line of defense. And then specifically the open of that opco candle. ES is nearly going to make a high relative to that 10 o'clock high, whilst NQ is still trading below it. So if we're going to see ES reject that high, whilst NQ doesn't, then to me that's a sign of, okay, this is a bigger SMT and we might form the high of day here. So what we're seeing now is that ES has taken out that high whilst NQ hasn't. So you're going to see me type final chance here. And I really need to begin to see weakness towards the downside now if we're going to see lower prices next. And what's interesting, by the way, and some of you are going to be like, what? ES has just reached the 5,900 price level, which was the key level that I've provided to you. So therefore, I'm really interested in seeing how they're going to deliver from this 5,900 price level. I need to see the market displays below this price range of that BC again. I need to see it displays below this wick as well. If that occurs, then to me that's a confirmation that order flows effect very weak and that we're likely going to see, or very bearish I should say, that we're likely going to see way lower prices on NQ and ES. And in order for that to be the case, I need to see ES begin to displace towards the downside as well. If we now begin to run up higher on ES and just begin to basically trade in that new range from 5,900 to 6,000, then to me that's a warning sign. So it's pushing deeper into that upgo candle right here. As outlined, I do not want to see the market displace above that upgo candle. It's allowed to just trade above it, wick above it, but it shouldn't displace below it. I'm monitoring the reaction now that we are taking out these relative highs on the 1 minute chart. Pay attention to the high of this upgo candle. NQ is making higher highs here, whilst ES is making lower highs. 10:30 is opening up. Let's see how 10:30 is going to open up. Key open, of course. Let me just turn the time cycle on. All right, we've traded above this candle's high, paying attention to the close of 10:30 here. ES is also making a high. I really like this indicator. Thank you, John, for having created it. In my opinion, it's ideal and it really helps me a lot with basically visualizing what I see in these charts based on time and price. ES is making lower bodies still, whilst NQ is making higher bodies here. So that's again a correct correlation inside of this high formation here. So let's see if this is indeed the final chance for the market to roll over. As outlined, in order for that to be confirmed, we need to see the market displace below this old BC again. Because if you measure the range as well from this high to this low, what I want you to see, sorry, let me draw it to the post manually because you're going to be confused why the box here is green on top and here's red on the bottom. You can see that we've retraced into a premium of that range from 10 o'clock to 10:17. 10:30 opens up. We initially reprice higher, taking out the buy side liquidity resting above these highs, whilst creating SMT between NQ and ES relative to the bodies. So let's see how they're going to use this. ES is also closed higher now. This is beginning to look very ugly and very messy. And look, do you guys now understand why I don't like to trade in this type of environment? Like honestly, if I would be in a short now, like outlined, I wouldn't first of all really care because of course a partial would have already been taken. But secondly, like honestly, environment selection is key. Like I want to be out there in the environments that I know to be high probable. I don't want to be in environments where I can anticipate time distortion and such to take place. It seems like they're holding NQ in a consolidation until ES reaches some higher levels before eventually rolling over probably. As long as NQ doesn't displace above that upgo candle, of which I have the open annotated, meaning until we see strong close above the level and we see the market displace towards the upside, I'm anticipating that we're still going to draw towards the downside. And this is where patience is key and where you simply need to be able to look at these charts and think to yourself, I don't care what's going to happen next. It's simply a matter of waiting and allowing the market to print, meaning allowing the market to do what it's programmed to do and what's likely going to do next. And this is where the majority of you probably are like, can't it just move? Can't it just begin to expand? Can't it just begin to move in my favor? Can't it just draw towards the south liquidity pool that I'm anticipating? Guys, what you want, yes, what you deem, or what you anticipate, yes, what you think is likely going to happen, yes, has absolutely no bearing over the delivery of price. Meaning, what you need to do is you need to align yourself with the underlying order flow. If you align yourself with the underlying order flow, you can read the market for what it is. But if you are constantly trying to project and project and project and thinking to yourself, I think I know what should happen next, yes, if you think that, you're not going to be able to read the market objectively. You're not going to be able to look for these algorithmic signatures that are telling you what's likely going to happen next. And therefore, you need to basically allow yourself and the permission, or you need to give yourself the permission, so to say, to be able to literally just be out here and just reading the market for what it is and not trying to, force your own will, so to say. think they're holding it for the next macro window. Meaning I think they're holding it for another about 8 minutes, something along those lines. We'll see. ES is still making high highs, whilst NQ is making those lower highs relative to the 10 o'clock high. So it's possible that this is a bigger SFT being set up inside of the daily CB, which can then lead to further repricing towards the downside. Pay attention to the direction of 25% of the daily CB here. So far, I like the fact that the bodies are closing at that level. As outlined, I need to see the market displace below this 1 minute BC here. If it displaces below that 1 minute BC, then I anticipate lower prices to be next. Next macro window is incoming, so let's see how they're going to deliver during that. Five more minutes until the next macro begins. If they begin to already displace towards the downside in advance of it, we can anticipate that we're likely going to see big down close candles during that macro window. If they won't displace it towards the downside in advance of that macro, then the macro window has to displace towards the downside in order for me to feel comfortable with the idea of lower pricing coming. Notice that a small CB has been created here. I won't even annotate it, but notice that there's a small CB through this upclose candle with respective open. No SMT on the highs here yet, only that bigger SMT relative to the 10 o'clock high. I need to extend my my drawings to the right a bit because of the fact that it's all taking so long. And honestly, this is the type of delivery where, in my opinion, it's best to just, walk away, let the market do its thing, and just allow it to do what it's like going to do next, what's programmed to do. You don't want to be over analyzing in this type of delivery. You just want to submit the time and wait for the market to show its hand. Pay attention to the direction to the CB. ES still hasn't made a higher high. So what you see is that both NQ and ES have made lower highs. So far, I'm referring to the highs here relative to 1037. The Dow also hasn't made a higher high. So I wouldn't be surprised to see one of those three markets still make one more push higher. Maybe during the macro window, create that SMT here and then begin to roll over, because still what you need to see, guys, is that we haven't really shown a willingness to displace higher yet, meaning we have just been going back and forth, and this is time distortion. This is all irrelevant price action. What matters is that we've retraced into a premium of the range from this high to this low, and now it's just a matter of time before we wait and see, is NQ going to roll over, yes or no? ES has created a high high here, whilst NQ created a lower high, and the macro is about to begin, so pay attention to what's likely going to happen next here. If they're going to roll it over, it has to occur now. For your info, this is all being recorded live, as you can see. No hindsight chatter, no after the fact speaking. No, you are literally watching over my shoulder whilst I'm reading price for you. Pay attention to this BC's price range. Notice that we've repriced below it. New macro is opening up now. It's 10:45. Let's see how they're going to utilize it. I would like to see this macro begin to expand towards the downside aggressively. I don't want to see it go back and forth again. No, I really need to see it begin to run. Pay attention to this CB here. This CB has formed after that SMT formed on the highs, so ideally you never want to see this CB get displaced above, especially considering the fact that we're now as well, of course, in that new macro window. If we would displace above this CB, it would significantly decrease the chances of the market rolling over. The moment the market reprices below this low here, I anticipate speed and velocity towards the downside to come. So far, direction to the CB is beginning to look very interesting and very good. ES is also following along with NQ. Let's see if it wants to begin to accelerate towards the downside now. At this moment in time, again, we need to see this macro expand lower. If this macro does expand lower, then that to me is a very big warning sign that we're likely going to be range bound for the remainder of the day. I have absolutely no interest in staring at that. Sales liquidity is resting below this low, because this is now the previous 30-minute cycle low. Just going to put vertical lines at the 30-minute cycle opens. That's a partial. That's the next partial. And if it accelerates now towards the downside, we need to see the market really begin to want to show weakness to draw towards that 930 low. The time distortion was very ugly that took place, but besides that, pretty clean run. And the reason why I'm not a fan of this delivery here overall is that, well, what I want you to see as the following is that ES is not making lower lows whilst NQ is. And sometimes it takes some more time for our objectives to be delivered, but usually they get met. And the reason why it's so crucial that we begin to see ES also roll over is because then intermarket relationship is supporting this move towards the downside. Right now, it is only supporting it fractally. So for the small time cycle, but not for the bigger time cycle yet. And that right there is something that you will have to learn over time by paying more attention to intermarket relationship and such. So at this moment, what I will do is I will annotate this downclose candle. This downclose candle has to function as resistance price. If it doesn't function as resistance on price, then the sell program is over. Why? Notice that we have this 1 minute BC here that formed, that the market shouldn't display above again, because we have now closed below it. We have formed this CB. So if the market is going to remain bearish right here, it shouldn't display above that previous 30-minute cycle low. That's the thought process. ES is still not trading below that previous 30-minute cycle low, whilst NQ is, of course, and that's a correct correlation, and that's SMT, and that's why I'm saying, again, our sales liquidity objective of the initial run higher has been met. We have taken out our previous 30-minute cycle low. So if we now form a low here and then begin to displace towards the upside, then to me, that's going to be the end of this session. I'm going to call it a day because I have no interest in the afternoon session either. I think we've already done a pretty great job with walking you through this delivery. Again, I apologize. Pay attention to this 1 minute CB here for info. But I think I've already walked you through the delivery quite a lot. I know that I've been a bit quiet, of course, here and there, but when the market is consolidating, like you just need to wait. Like it's as simple as that. You just need to sit and observe. And I hope you were still able to gain some value of that. And at this point, we're just going to wait and see if they're going to utilize the CBS resistance on price, yes or no. And quite frankly, I do not regret not having traded this because this is ugly price action. And to me, the cleaner days will come. And I know that, and those are the days I will participate in. ES is retracing into a CB as well. If this functions as resistance on price, whilst NQ also rolls over, then that's a good sign. Notice how the bodies are closing inside of this CB's price range. The wick just went above it here with a minor step, but the bodies are closing inside of it. Now what I want to see is that both NQ as ES displays below this low which formed at 1052, because that would suggest the idea that right now, for this current cycle, the order flow has in fact changed, and therefore we know that we're likely going to see big down close candles taking place. And I'm looking on my other screens and I'm zooming out a bit, and this might be a bit of a far stretch, and I'm not going to share it just yet, but let's first see if they're going to manage to draw towards this 930 sell side liquidity pool, because it's possible that we're seeing a very big AMD fractal play out for this whole morning session, which we'll discuss soon. So here we can see that NQ is about to take out this sell side liquidity pool below the 1052 low, whilst ES hasn't yet. So like outlined, I need to see ES catch up to NQ. We're trading near 50% of that upgo candle. I'm sorry, of that daily CB. I'm telling you, I'm tired. You can tell my thoughts are not that clear, you know, and I apologize, but it is what it is. I hope you appreciate me still being out there and recording the tape for you. Because I was actually thinking of just sleeping in and taking a big, a big nap. But yeah, here we are. I'm actively monitoring if ES is also going to take out the low. NQ is already taking it out. Pay attention to the 50% of that daily CB now. Let's see if we tap into that, and the reaction to that will be crucial. ES has taken out the 1052 low as well. So I need to see ES displace below that previous 30-minute cycle low, because that right there would suggest the idea that these marks are in fact in sync. Alright, 50% of that daily CB has been reached. Let's monitor the reaction to this level now. If we slam through it and we really displace through it, then the 930 open price is the first objective, and we're just nearly tapping that. And the next sales liquidity pool is the sales liquidity resting below this low, of course. ES is also beginning to show signs of wanting to reprice lower, but it has yet to trade below that previous 30-minute cycle low. So again, that correlation is still present. I'm not a fan of that. The 11 o'clock open is upon us, so let's see how they're going to open up at 11 o'clock. Preferably, I want to see open high for this 11 to 11:30 time window, because that would suggest the idea of us even drawing lower. At this stage, all that matters is that the majority of the targets have already been met, of course, and therefore it's simply a matter of, okay, are we going to see the final objectives get met, yes or no? And that's how you need to view this. So sales liquidity below that 930 low is the first draw, or the next draw. How we trade at this 930 open price will be crucial moving forward. I don't want to see a rejection of this level taking place if the order flow is going to remain bearish. There's the sales liquidity pool reached, and that's the target met. Now, if we displace below this low, here, it's possible that we are likely going to drive it lower. Because if we displace below that low, then to me, sales liquidity below this low here is the next draw. And the reason why that would be the next draw is due to the following. If we apply our time cycles, you can see that this low here is the low that formed between 7 to 8:30 here. And we consolidated, so let's see how they're going to deliver. Okay, so NQ has reached at 9:30 open and formed a new low, whilst ES hasn't yet. Here. And what is very important to note is that because ES hasn't taken out that 930 low and hasn't formed a new record trading hours low, what can occur is that we can reject this low now and then retrace back into the range that was established ever since 10 o'clock. And that would be basically a end of day signal for me, because that would mean that for the remainder of the day we're likely going to go back and forth in this range. Now, if we displace below this low, however, and we see the signs of weakness, then to me the 7 to 8:30 low is the real draw liquidity. But that would only be like if I was short, let's say, it's a good sign, let's say 6 to 9 contracts, okay? I would have taken either 5 or 8 contracts already off, meaning the majority of the position, and would only leave 1 contract running for this final draw liquidity. Because again, ES is not following along yet with the idea of lower prices on the highest swing. Surely it's beginning to show signs of weakness as well. However, it's still not trading below the lows, and Q is trading below. And quite frankly, if we're going to see the signatures for the market wanting to retrace into that range, I'm just going to cut the recording because I have absolutely no interest in sitting through that for the whole day. I don't care. The main target of this row has been reached, and that's what matters. That's all that you should worry about and all that you should care about. All right, so this is something I didn't want to see. Notice how they failed to close aggressively below the sell side liquidity pool. Notice that the wicks went below it, but the bodies did not close below it. I'm giving it, let's say, 10 more minutes or 9 more minutes before before I end this recording, because that's of course when the market ends. But I'm not a fan of this type of delivery. It's possible that they're repricing it above 930 to send it lower even more. However, I need to see the signs of that being the case soon, because else this is likely going to retrace back into the range, and then it's done. The moment we see strong closes below that old low, that 930 low, I anticipate lower prices. If we do not displace below that level again, then we're likely going to be range bound. All right, I think that's already signaling to me that it's likely going to be messy. Not a fan of how long it's taking for a high to form. It's still possible. If we go to a 5-minute chart, you can see that we have formed a inversion to value gap now on the 5-minute chart, but it's really not looking too pretty. And here you can see that clear original consolidation as well. This is where a lot of sell side liquidity is engineered under. So that is why if we're going to see a full AMD fractal for the morning session, this is where I would reprice towards if we're not going to displace higher. So invalidation for me would be that 50% of the day CE. Normally I would be out here just rambling and stuff, but honestly, like I'm very tired. I need to rest. I need to recharge after this recording is finished. I'm probably going to head straight to bed because like some early morning runs tomorrow as well. I'm preparing for a new marathon in 3 months from now. So gotta stay active. I'm going to give it 4 more minutes for it to roll over, so to say. If it doesn't roll over within those 4 minutes, or at least begins to show signatures of wanting to roll over, then to me that's the day done. And again, I apologize for my level of energy during this recording, but days like these are also normal. And one thing I want to share with you that even though it's a bank holiday, if this would be any normal day, then I would have either decreased leverage significantly because I'm tired, so therefore my thoughts are all over the place. And secondly, or the second thing I could do is just walk away and not do anything for that particular session, because the moment your body, so to say, or your mind is not in the right state of mind, you invite the opportunity for bad decisions or poor decisions to be made. So what you then need to do is you basically need to disengage, so to say, and you need to allow yourself to recharge, because another opportunity is always there, a new opportunity is always present, and it's your job to know when those high probability opportunities are there and know when they're not. And you want to avoid the days that are, of course, where you as the operator are not in the best state of mind. Pay attention to 50% of the day CB. Final line of defense for lower prices. If we close aggressively above this level, then to me, then that's the warning sign. We have closed above the 50% level. 1 minute left for the macro. Let's see how they're going to deliver it. And I think that's going to be it, guys. I hope that you found this lecture insightful. Again, I apologize for the level of energy during this recording. I was very tired whilst looking at this delivery with you. But I hope that you were still able to gain some benefit from it. And I look forward to catching up with you in the next one. Be safe.